So the NASDAQ had the biggest single day drop of 2023, 2.3% minus today. That is the largest single day drop of 2023. Does this signify anything? Does this signal anything? Is this finally the blow off top that professional analysts and gurus alike were all projecting weeks ago? We're going to talk about what this means for the broader market, whether this is a sell signal, or I don't want to say sell signal because a lot of people get their panties in a bunch, but is this a signal that we are due for a pullback? What type of pullback are we going to see in the markets? Is this a precursor to something larger that we should be paying attention to? Now, this didn't happen randomly. We did have a couple of huge earnings events, one on Tesla and the other one on Netflix. These are two of the biggest companies in the world. Now, we did end up selling calls on Tesla, and I'll tell you why I sold calls on my Tesla shares. Those sold calls went up to 90% overnight. We ended up closing them in one day because Tesla had an almost 10% drop. So we're going to be talking about that, as well as Netflix, which did also tank by 8.5% today as well. Those two stocks are huge representatives in the NASDAQ, and that is part of the reason why we saw the NASDAQ fall by 2.3% today. So let's get into what this means for the broader market, and then I will give you some of the trades that we took, as well as some of the trades that I'm looking to take based off of the information that we have so far. Please keep in mind that the FOMC is actually next week on July 26th, and it is projected 99.6% that the Fed is going to raise again on July 26th by 25 basis points. Now, if inflation is coming down so quick from 9% last year to 3% this year, why are they so keen on raising rates? So we will talk about that as well, but this is July 26th. So without further ado, let's get right into it. But before we get into the video, I do want to say that we are currently in the middle of my summer mentorship. This is where I take 20 students and walk them through everything that I know about trading from ground zero, starting with technical analysis, building a foundation, moving on to trading, then options, then futures. This is a complete trading mentorship program. I went to finance school, and none of this stuff I learned in finance school, right? So this to me is like a university course. We are going to be running a wait list for the fall mentorship program. Make sure that you check out the link in the description if you are interested. Get yourself on the wait list because there will only be 20 students, as we currently have only 20 students in this class as well. So we're going to keep it small. Make sure that everybody progresses at the same pace, and I guarantee you by the end of this, you will be a better trader than when you started. All right, so the NASDAQ is down, as I said, by 2.3%. Funny enough, the S&P 500 wasn't down that much. The S&P 500 was down today, but it was 0.66%. However, the NASDAQ was the one that actually entered a bear market way sooner than the S&P 500, which entered a bear market in early June. The NASDAQ entered a bull market a couple of months before that, and the NASDAQ actually saw a much more violent run because the NASDAQ is more tech heavy, and all of the tech stocks have either met all-time highs, beat all-time highs, or are very close to all-time highs, minus a few like Google and Amazon. But you know, the pace at which, say, Nvidia has been growing, the pace at which Apple has been growing, it's just been insane, and it's been really dragging the whole NASDAQ behind it. So it's not a surprise that the NASDAQ, which is very top heavy, is the one seeing most of the declines today. Now, I'm going to share with you a couple of things. I don't think this is a precursor to something larger. I do think, as I said before, that we will get a small pullback. I'm going out and saying on a limb that we are going to get a 5 to 10% pullback in the broader market. Now, the reason that I say that is just based off of data. You guys know that we don't guess on this show. You know that we don't really go off of conjecture or go off of anecdotes. I like to back things up that I say and that I see based off of data. And on the data, every time that we go from bear to bull market, here's every single time that we've done that, minus this time right now in 2023. So this goes from the Great Depression all the way to the pandemic bull run of 2020. You can see that most of the time, minus the pandemic bull run, which was the most insane thing I've ever seen in the markets, you typically see a pullback within 1 to 4 weeks. This is very, very normal. Now, there's only been one time in history since World War II, I should say, because post the Great Depression, obviously the markets were still reeling from the worst depression of our life. But there's only been one time that the market actually went back into bear market status since the Great Depression after crossing into bull market status, and that was in 2008. 3 months later, we were back at minus 25%. So if you think that this is akin to 2008, by all means, if you have the data to suggest so, I'm not going to argue with you. We don't know the future. Nobody knows. I'm willing to say that we are not anywhere near 2008. I'm old enough to remember 2008, and it was a horrendous, horrendous time. People personally I know were being kicked out of their homes on foreclosure. People that I know personally were kicked out of their jobs. People I know personally were taking, part-time jobs at Walmart and Starbucks. To me, this is nothing like 2008. Obviously, people can't tell the future, but we don't have any of these bubbling signs like 2008. So if you think that, more power to you. Otherwise, to me, this is just a normal pullback. And another thing that backs this up, unemployment is at an all-time low. And then obviously we have the inflation numbers going from 9% year over year last July to 3% year over year this July. We've never seen a downtrend in inflation like that. Another thing is that we have not yet seen earnings compression. So yes, you heard me talk at the outset about Tesla and Netflix. However, their earnings were not bad at all. The thing that disappointed with Tesla was that their margins came in weaker than expected. Their net operating margins came in at 9%, but that was sort of expected that their margins would be lower because they were actually dropping or slashing the price of their cars. The market just didn't expect it to be that low. However, I think this is a temporary pullback on Tesla. Otherwise, Tesla beat earnings, Tesla beat revenues, and absolutely killed it. We did sell calls on our Tesla shares, and the reason I sold calls was really because of the fact that Tesla earnings are usually sell the news events, and we were coming up on this weekly trend line. So you can see here yesterday I said I'm selling the 325 call against my Tesla shares, expiring July 28th for $500. That's free money to me. And the very next day, which is today, up 90% on my Tesla covered calls. I'm closing here. We'll wait until next week to devise another potential Tesla selling strategy. Now, this comes a day after I sold my Tesla cash secured puts. If you guys are familiar with this channel, you know that we are selling Tesla cash secured puts regularly. And I sold the 252.5 put, the 255 put, and banked on those. This 87% was had in, I think, 3 days after selling these puts. So I have not been assigned on Tesla options in 3 years. So I continue to sell cash secured puts. I continue to sell covered calls, and it is literally free money. If you want to learn how to do this, you want a dedicated video on Tesla selling option strategies or just selling option strategies in general for regular income, leave it in the comment section below and I will do that. If you want access to all of our plays, click the link in the description and apply to the Academy. You will get access to all of my plays and will be able to take advantage of what I call free money in the form of selling option strategies, especially if you own the shares. There is no reason why, if you're just going to hold the shares, you should not be selling options against them. Now, Netflix earnings were great too. They did miss on revenue, but they beat on earnings and they added, I think, twice the number of subscribers that the market was expecting. So the point that I'm trying to get at here is we have not yet seen the earnings compression happen in the market. These are earnings reactions. Sure, these stocks did go up insanely pre-earnings. So a lot of it was taking profit in my view, dumping shares at highs here. I don't think that this is really endemic of anything to come. And then the bank earnings went crazy too. JP Morgan did really well. You had Goldman Sachs move up on earnings as well. So if you look at the financial sector of the S&P 500, you will see that we're absolutely mooning. So earnings have not yet really been affected by rate hikes. So to me, this right here is just a pullback. It's just a small pullback. That's exactly what it is. And in my view, you are also getting Tesla 10% cheaper. And these are when you want to start buying the dips. You can dollar cost average blindly, or you can dollar cost average on severe red days, which to me is a much more superior strategy. One other thing I will share with you is if you look at the NASDAQ was green the last 16 Julys. July is an epic month for the NASDAQ. The last 16 years in a row, the NASDAQ was green. So I have no reason, coupled with the things that I talked about, I have no reason really to predict that the NASDAQ is going to shit the bed here, except for if Apple, for instance, misses earnings, if Microsoft misses earnings, if Meta misses earnings, if Nvidia misses earnings, then we can start talking about a real correction and not just a small pullback. But until then, until data comes in, I have no reason to believe otherwise. Now, I'm not looking to get into really expensive stocks like Nvidia, but like I said, Tesla is a welcome correction here. If we do get a correction in, say, Amazon or Google, that could be a welcome correction as well. But Nvidia, which is at all-time highs, I'm not really looking to jump in it. The QQQ, if we do get a 10% correction or more, I'm definitely going to be dollar cost averaging as I normally do. Same thing goes for the S&P 500. It's pretty simple, even if you don't know your way around technical analysis. Anyway, traders, that's it for this video. Quick little short video. I think that this is just a small pullback in my view. I don't think that this is a sign of a crash that's upcoming. It was crazy how much people were overreacting today to this drop. It is the largest drop that we've had in 2023, but it's warranted. We typically see pullbacks 1 to 4 weeks after entering a bull market. So nothing in my view to really panic over, and I will be looking at strategically buying the dips, selling puts during this time frame if we do get a correction, and then obviously day trading as well. If you want access to all of our trades, link is in the description below. If you want a video on option selling strategies on Tesla specifically or on any other stock in general, leave that in the comment section. Get on the wait list for the fall mentorship. Leave a comment. Let me know what you got out of the video. Hit that thumbs up. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.